So today we're doing a showdown, California versus Texas. What you pay in and what you're buying in terms of a few select outcomes in education, health, and homelessness. And one of the fundamental concepts on how America works is that if you want better for your community or your country, you've simply got to understand your civic wallet. That's my term for all the money we spend, state, local, federal, public tax money, and private charity that buys us what we think of as public goods and services in the US. And there are two sides of it, what we pay in and what it gets spent on. And in the US, even though things seem crazy right now, the Constitution still says the power comes from the people. And it's up to us to lean in and learn more about public finance if we want things to change. If you just want to know which state should I move to, this is not that video. This is for civic builders, people on the court or thinking about getting in the game of improving the American civic landscape. If that's you, you need to understand how public finance really works and how taxes translate, or don't, into outcomes. And by the end, you'll learn a lot more about the mechanics of taxes and how to spend them on what works. And at a time when we're more polarized than ever, and it seems like the country's math might not work for very much longer, it's worth understanding. Because no matter your political persuasion, what you're about to see is going to flip your assumptions about government spending 3 different times in the next 12 minutes. So let's get into it. Let's look at a person living in each state with the same salary, the same home purchase price, and we'll see how much money is left in that person's wallet at the end of the month. Now here's my disclaimer. States raise money in a lot of different ways. Some are more progressive, meaning if you make more, you pay more. Some less so. There's sales taxes, corporate taxes, other fees, taxes on alcohol and tobacco. You get my point. And some of you might question this particular example I'm going to pick out, but we have to start somewhere. You can't learn this stuff in the abstract. You need concrete examples. So that's what we're doing here. So let's take a person making $120,000 annually and purchasing a $500,000 home with a 20% down payment in San Jose, California, and Austin, Texas. First up, we'll talk about income taxes. As you might know, California has one of the highest state income taxes in the country, with rates ranging from 1% to 13.3%, depending on your income. But keep in mind that these are charged marginally, meaning it's not just a straight up percentage. It's more like different percentages are charged on different layers of your income cake. And if you want to know more about that, check out this video linked up above. But what that translates to in California on $120,000 is that you pay 5.9% in state income taxes, which amounts to $7,068 annually. And on the other hand, we have Texas, which stands out because it has 0 state income tax. That's right, folks. Texas is one of 9 states in the country that doesn't charge an income tax at all. And I'm sure you're curious to know which states those are, so I'll go ahead and list them right here. Next up, let's look at property taxes. California's property taxes are relatively moderate, averaging about 1.149% of a property's assessed value. Here's a $500,000 home in San Jose, California, and here's the assessed value. Now, assessed value is just what your county says the property is worth for the purposes of charging taxes. There can be all sorts of different exemptions and deductions. It is not the same as your home purchase price. Now, if you're curious to know about those taxes, Zillow will usually give a pretty good idea because they're pulling data from all the publicly available databases. But to get more certain, what you want to do is go to the county website associated with that address and then enter in the address or the county parcel number. And what you'll often see is a bill, the tax history, and some other information. So with this property, here we see a local assessment in addition to the state tax rate. And this could be for any number of different things like sewer upgrades, local schools, or different kinds of levies that voters vote into place to support things like a local park system. But nevertheless, the local assessment here brings the total annual bill to $6,139. Now, how does that compare to Texas? Is Texas as affordable when it comes to property taxes as it is for income taxes? Well, you might be surprised to learn that Texas actually has some of the highest property taxes in the country. Here you can see this example home in Austin, Texas, where the property taxes clock in at $9,304. And why is that? Well, it's sort of logical if you think about it. That's because governments in Texas rely heavily on property tax revenue because they don't have a state income tax. So everything's kind of a trade-off. Now, what about other taxes like sales taxes or gas taxes? For sales taxes, you've usually got the state rate, and local governments are usually permitted to add another chunk on top. And this generally derives from the concept of home rule, which allows broad latitude for local governments to govern themselves without needing approval from the state legislature for every single decision. So I'm not going to break all of that down in this video, just be aware of these differences. So let's look at the big picture of our take-home pay in California. Here's our gross annual income. And here you see our federal income tax, which is based on the 2025 tax brackets and the standard deduction. And note that it does include the FICA taxes for Social Security and Medicare. And here's the state income tax. And that leads to a total annual tax that's coming out of your paycheck of around $34,115, which nets out to an annual after-tax income of this amount. And of course, when we divide that by 12 months of the year, we get $7,157. And now, of course, this doesn't take into account things that could vary, like how much you'd save for retirement or pay for premiums and health insurance, or really the state sales tax factor. But it gives you a basic amount left to figure that out with. Now let's compare that to Texas. Here's our gross annual income, our federal income tax, state income tax, which is 0, our total annual taxes, our total net take-home pay, and then we divide that by 12 months, and we get $7,746. That's a pretty big difference. Next, we'll dive into monthly housing costs. Here are the numbers for that $500,000 house with the 20% down payment and a mortgage interest rate of 6.8%. Now here we see our monthly mortgage payment and the assessed value. We also have the property taxes figured in, and then we get the mortgage and taxes together for a total of $3,129. Now let's look at that house in Austin, Texas. Here we see the home price and the down payment with all the same information, and we include all the property taxes here too, which yields a total monthly housing cost of $3,374, a little bit more. Now let's get to the showdown. How do these two places stack up against each other? Well, here's California's monthly take-home pay minus monthly housing costs, and at the end of the month, we are left with $4,028 in our bank account. Now let's look at Texas. Well, here's our monthly take-home pay, our monthly housing cost, and so then at the end of the month, we are left with $4,371 in our wallet. And that's a difference of nearly $350, which, if you take a whole year of that, you'll see adds up to over $4,116. And if you invested that extra money in a fairly conservative investment yielding 4% a year at the end of 25 years, this is how much extra wealth you would actually have. Now, as you can see, even though Texas has the higher property taxes, the absence of a state income tax can result in quite a bit more in take-home pay compared to California. But here's what the analysis doesn't tell you. What are you actually buying with those tax dollars? Well, some people think of it like this. What kind of a society are you buying into? And due to the particular kind of federalism we have here in the United States, that society can be really different state to state. So what are you getting in exchange for those taxes? Well, let's look at 3 areas where it really matters: health, education, and homelessness. And this is where I'm going to take you on a roller coaster ride. So first up, let's take one basic global public health indicator: maternal mortality. This is when a mom dies during childbirth or within about 6 weeks from birth from pregnancy-related causes. In California, 10.5 mothers die for every 100,000 live births. But in Texas, that number is 28.2. Texas has nearly triple the maternal death rate of California. If it were a country, Texas would be doing worse than Uzbekistan, Syria, Sri Lanka, and Egypt. So what explains this massive difference? Well, California collects well over $10,000 per capita in state and local taxes. Texas, just a bit over $5,000. And one of the biggest differences in how they spend that money is through the Medicaid expansion. Now, keep in mind this is different from the subsidy expansion fight that is triggering the 2025 shutdown, but it's not completely unrelated. But what this is that after the Affordable Care Act passed in 2010, states got to decide whether to expand Medicaid coverage to more categories of low-income adults. And California chose to expand, and Texas didn't. And what that translates to is massively more people in California have health insurance. California's uninsured rate is 6.4%. Texas, 16.4%. It's actually the highest uninsured rate in the country. And studies comparing states that expanded Medicaid versus those that didn't found that expansion states saw their maternal mortality rates drop by roughly 7 deaths per 100,000 live births. So spending more on this directly translates to real and pretty dramatic public health improvements. Now let's take a look at education. California spends almost $17,000 per pupil versus Texas's nearly $12,000. So California's kids should be doing better, right? Well, let's take a look at 4th grade reading proficiency. This is the NAEP 4th grade reading proficiency rate, which is a tougher standard than most state minimums, but it basically tells us the percentage of kids that are doing well on reading in 4th grade. In 2024, in Texas, 28% of 4th graders scored NAEP proficient. And California, despite spending a lot more, achieved a rate of only 29%. That's almost the exact same. But that's not even the most interesting thing in these numbers. This chart shows the change in the performance rate over time. And when you look at the performance of all 50 states since 2015, every single one of them in the nation declined or stayed level. That is except for one, Mississippi. They jumped up 6 points in that same time frame, when literally every other state in the nation did worse. So what's going on here? This is one of the poorest states in the country. Did they just start making big investments in education? Well, no. They started spending what they had differently. And what they did has come to be known as the Mississippi Miracle. So in 2013, the state legislature there passed a law requiring kids to actually be able to read before moving on to 4th grade. No more just passing them along. They retrained teachers in proven reading methods like phonics. They put literacy coaches in schools, and they gave struggling readers real support. And it worked. Without spending significantly more money than they had before, Mississippi went from being one of the worst performing states to near the national average. And it narrowed the achievement gap in the process. So what does that tell us about public spending? Well, maybe it's not always about spending more to get results. Now let's take a look at homelessness. California has 46.5 homeless people for every 10,000 residents, the highest in the nation. Texas, only 9. So Texas must be doing something way different with their approach, right? Actually, no. In this case, both states use similar policy approaches. Some variation of housing first, emergency shelters, support services with some minor tweaks. No, in this case, the difference has nothing to do with spending at all. It actually has to do with the housing market and the way it's regulated. You see, Texas's housing supply has largely kept pace with population growth. And when you don't build enough housing for the people, even really low-end units get turned into luxury apartments. This is what Ezra Klein and Derek Thompson in their book Abundance call the grim absurdity of liberal housing policy. California spends billions on homelessness while its zoning and environmental laws make it nearly impossible to build the housing that would have prevented this crisis in the first place. This is a story I lived as a housing professional in Seattle, Washington. You just can't spend your way out of a crisis created through regulation. And also the pressure of existing homeowners who benefit from that regulation because scarcity drives up their values. And I say none of this to undermine the public investments we make in homelessness relief. Those are absolutely necessary, but they're just not sufficient to address the crisis in places where it's gotten this bad. So, what do these 3 stories tell us about results? Well, sometimes it's about spending more, but sometimes it's about spending differently. And sometimes it doesn't have anything to do with spending at all. It's about lessening regulation and somehow balancing the competing interests of existing homeowners with literally everybody else. Got it. But if each of these things are true, what this also means is that getting results isn't about Republican policies versus Democratic policies. If there's anything I've learned from 20 years in government, philanthropy, and nonprofits, it's that you just can't apply one single political lens to every problem. If you're after what works and not just going along with the herd, well, that's something you can only figure out by understanding your community, your civic wallet, and thinking for yourself. And here's the other thing civic builders need to know. Government, especially in this country, is not a monolith. Power is divided between federal, state, and local government. You've got to go way, way deeper to know who actually controls the spending and the outcomes. Healthcare coverage? Well, that's a combo of federal and state. Education? Well, that's largely state legislature and local boards. Housing supply? Well, that's almost entirely local. City council, zoning board, planning commission. And this is the gift of American-style federalism. Maximum choice in where to situate policy decisions, but also maximum complexity, which is a pretty big responsibility for citizens in a country that's built on the idea that the power is in the people. I hope learning more about public spending helps us wake up to that responsibility and also our power. We can't just leave that power to the politicians and the parties to tell us what to think. So if you actually want to make things better, you too can break down your civic wallet and figure out where you have leverage for the change you want to see. That's what real civic builders do. If you want to go deeper on how to do that, check out my other videos, take a look at the resources linked down below, and I'll see you next time.